It's the brightest set of predictions Jones Lang LaSalle has given for several years. The property industry finished 2013 on a high, with £40 billion of real estate predicted to have been traded. JLL gathered clients together this week to share its thoughts on how the year is shaping up.
One of the interesting things is, although central London's held up really well, the vast amount of that increase in activity has been in the regional markets. I think the other interesting point from last year, again not finally nailed yet, is the IPD performance, and I think when the dust has settled we'll see that total returns from IPD are probably 9%. Which is a very strong performance, and it's a very strong relative performance when we look at where base rates are and we look at where inflation is. So I mean, what a difference a year makes in the in investment markets in the UK.
Looking forward, JLL's head of research says the UK will remain one of the world's fastest growing economies in 2014.
The UK has been the strongest performing economy in the Western world for the past 2 quarters, and we believe that sort of level of exuberance will continue into 2014. The official government forecast is for 2.4% GDP growth. We believe that will be exceeded slightly. If you look at the figures from both the services and manufacturing sector, confidence is extremely high. Business decision makers are looking to invest in expansion. So all the signs are that we are looking for another good year for the UK economy. Perhaps not as great as it will be in the US, but certainly amongst the strongest performers once again.
So, with the bright outlook for the economy, JLL says that while London will continue to dominate, the big 6 cities across the rest of the country will also see a marked increase in activity.
Well, to be honest, I suppose the theme is polarisation, whether it be prime or secondary, but particularly in the regions between the major dominant centres and the smaller towns. So there is a lot more activity around the big 6. Manchester's coming out really strong. It's really tackled the TMT sector, which is a very, very important sector in terms of technology, media. It's really expansive. Bristol also has harnessed that sector pretty well. The other region where we see a particularly positive outlook is in the Midlands in terms of manufacturing, distribution. That's really having a positive impact on speculative development for distribution centres. So that region has also got a healthy outlook.
Granger adds that London's growth will continue with further inward investment from overseas.
London's competition isn't from the rest of the UK, it's really from New York, it's really from the other major cities like Paris and Europe, but even out as far as Hong Kong in terms of attracting international investment, but also in terms of attracting the corporate occupiers. And it will go from strength to strength. It's in a good place, London. And residential prices saw double-digit growth last year. We are anticipating that it will continue to grow, but not at that level. That was an exceptional year in 2013, and we think things will calm down a little bit in terms of residential growth.
JLL's Ben Burston adds a lack of supply in the London office market will lead to increased refurbishment activity and some increase in spec developments.
And that leads to our second prediction then, was that we will see rental growth and a reduction in incentives. We see that in central London, and indeed that's consistent with our forecast from say this time last year, when we were forecasting that rental growth would start to come through in the second half of the year. It did, and we now see city prime rents at £60 a square foot, and in the West End at £100 a square foot. We're forecasting that this year that will rise to £65 per square foot by the end of the year in the city, and to £115 in the West End, and that's going to reflect partly that shortage of new supply coming through, notwithstanding that there's some very large developments coming through this year, but a majority of that space is actually already pre-let, and with a lack of supply in 2015, a particular shortage there, we think that that's going to start to translate into even more.
This is Nathan Cross for Estates Gazette.